This is the Haulin Assets podcast, where we show you how to start and run your own trucking company. Ever wanted to go out on your own? Follow Chris as he goes through the highs and lows of running on his own authority.
Welcome, everybody, to the Haulin Assets podcast, episode number 155. Today we are tackling everybody's favorite subject. It's 2024 insurance renewal time. Oh, strap in, everybody.
Yeah, it's going to be... we haven't talked about insurance for quite a while. Like I was looking back at my notes from the last time we talked about insurance, and it was actually when we renewed our first year.
Oh gosh.
So it's been like 3 or 4 years.
Wow.
That we've at least dedicated a whole episode to it. So I think it's high time that we talk a little bit about it. There's it's such an important subject. It for most trucking companies, it's in the top 5 of your overall expenses. So
is it really?
It is. Yeah.
That's huge.
Saving a little bit of money will have a significant impact on your bottom line.
Absolutely. Well, you heard him first. There, he's over there. That's Chris. I'm your host, Craig, and I am going to remind you to go to HaulinAssetsLLC.com. That's where you can get full show notes, documentation for episodes that have documentation. All that stuff is at HaulinAssetsLLC.com. You can also go to MotorCarrierHQ.com for tools, tips, merch, all sorts of stuff there at MotorCarrierHQ.com. And lastly, I will let people know, Chris, that at the end of this episode, we're going to debut a listener response segment. In this case, it's a YouTube comment. Yes, we are on YouTube, if you didn't know. And don't watch while you're driving, okay? Listen while you're driving. But if you find us on Facebook, find us on YouTube, make your comments known in those places. We want to address the questions you have. We've done it kind of in a spotty way in the past. We want to make it a little more formalized with a segment at the end of most episodes doing listener questions. So don't be shy. Go hit us up, YouTube, Facebook, Haulin Assets LLC, wherever you want to go make your comments on specific episodes, and we will do our best to answer those. So, all right, Chris, how are things going out on the road? Before we do insurance, any need for insurance this week? Any deer out on the road?
No, we haven't hit anything this week, so I think that's a good thing, obviously. So no need for insurance.
You'd rather have it and not need it?
Yeah. Although when you get to our size of a trucking company, stuff happens. So it's just a matter of trying not to have issues super frequently nor big issues.
Right.
If we're talking little things, I mean, that happens. But, kind of speaking of that, I talked a little bit about how this is the first time we've really addressed this topic in several years. Back when we were a smaller company, not as many trucks, we've got 11 now. We've grown a lot. I feel like we've kind of moved on from being a little infant to, maybe a toddler now.
A toddler company.
An ornery toddler.
Oh, that's
going through our terrible twos.
It's not the government. It's the freight market is going through its difficult teenager phase, right?
Yeah.
Sorry, go on.
It's kind of interesting. Like with that growth, we've made what I kind of consider a significant change, or done something that I think's we're a couple months into it now. That's been good. I'm not dispatching as much as I was a couple months ago, but that 6 months that I was dispatching, like, it consumed my life.
Oh yeah.
Completely. And, 24/7, 365 days a year, it was just nonstop. And so to try to kind of spread that a little bit, we decided to create essentially an after hours number that our drivers could call.
Tell me it starts with 1-900. After hours.
Well, you do that pretty well. Maybe we'll have you be the voice on the voicemail for it.
Anyway, okay, sorry. I derailed you. What's the after hours number?
Yeah, you don't want to go down that path.
I could. You don't want me to go down that path.
So we create this after hours number that our drivers could call in, either for evenings, middle of the night type stuff. Like I got called on it. I'm on call this week. So we rotate it. So between Nate, Brad, and I, each of us take a week. So, when those calls come in the evenings, early mornings, or Saturday and Sunday, we take the call. So I've been on call this week, got a call like 2:00 in the morning a few days ago because a load of one of our loads of produce, part of the load got rejected. Which this time of year it becomes, especially, we haul a lot of potatoes and onions.
Sure.
With those two, a lot of that product's been sitting
6-8
in
months
the sheds for a long time, so it becomes more common that stuff gets rejected. So had to deal with that, but it's been a good thing because I know now, like those evenings and the weekends that I'm not on call, so 2/3 of the time, like I don't have to worry. Somebody else is taking care of it, and so that's kind of one of the changes we've made as we've grown. That's been good.
Yeah. Okay, good. So once every 3 weeks you're on call, you don't sleep heavily, you sleep light, and then you get to chill.
I sleep just as heavily. I just make sure my phone volume is turned up so that when somebody calls, I hear the ringer.
Yeah. I'm sure your wife loves that.
And honestly, well, she gets back to sleep really easy. I have a hard time. Like when I get woken up in the middle of the night, I have a hard time going to sleep. So it really affects me more than it does her.
Conscience weighing down on you, Chris.
Probably. Yeah. But, and it doesn't happen that often. Maybe once every other time that I'm on call, something like that.
One of these episodes, we'll accidentally give out that number and you'll have listeners waking you up at all hours of the night.
I don't need more of that.
Just heavy breathing. 1-900 call Chris.
It's not a 1-900 number. We'll put that to rest right now.
All right. So Chris, let's talk about our main topic today, which is insurance. Now, insurance for trucking, like other things we've talked about, this is it shares a lot in common with other types of businesses. You can draw analogies from life and to life and all that stuff. But in some ways, trucking is just super specialized. And insurance, as I recall, is one of those things. This isn't like when you go onto a website where they gather 50 different quotes and you just pick one and you push the button and boom, you're insured. There's more to it than that, right? There's
way more to it. Insurance in and of itself is a fairly sophisticated purchase and complicated. And in trucking, you talk about it being really specialized. It is. And you need to be, because it's such a sophisticated purchase, you need to be armed with knowledge when you go into it. And hopefully, as we go throughout this podcast episode, we'll be able to arm you with a little bit more knowledge. So you know what questions to ask, kind of what you're going to be faced. You come into it not, in a position where you're not going to be taken advantage of. Most insurance agents are really good. They're not going to take advantage of you. But you still, there are some out there, and you just want to make sure that you have a general understanding so you know if somebody's trying to pull the wool over your eyes or they're telling you something that's incorrect. And hopefully we can arm people with that.
Yeah, and I totally agree. You don't want to get bit by a snake in the grass, but also, even if you have an honest, decent insurance broker, they may have their opinions on what's going to work best for you. Well, you should have your own as well, so you can work together to figure out what's going to be best. You don't just want to go in blindly saying, oh yeah, well, whatever you say. This is a huge issue, as you say, for your company, so you should know what's going on.
You should, and there, you can kind of, to a certain extent, lead your insurance and your agent in certain directions of where you want to go to try to save money if you know the right questions to ask and you know the right things to talk about. And so you can kind of steer the ship a little bit. And so, again, that's another reason that it's important to have a baseline knowledge of trucking insurance.
So let's start maybe by talking about who is involved in this process. We'll leave you aside for a moment, business owner, right? But who's helping you out? So you talked about the insurance agent already. What does an insurance agent actually do? Like, what does an interaction with them actually look like as the business owner?
So there's the insurance agent's one of the really big players and really the person that you're going to interact the most with. So in especially in trucking insurance, most insurance agents represent several different insurance companies.
Oh, interesting.
So they're essentially like an independent broker that will reach out to multiple insurance companies and try to get you the best price. And so that's one thing that you need to keep in mind. There are some that and it's not as common in the trucking world. You think of State Farm, usually an agent that represents State Farm, that's the only insurance company that they represent. But in trucking, most agents represent a lot of agents or a lot of insurance companies.
How has that gone for you? Has there been? I could see it going, pluses and minuses going either way. Is it the case that kind of keeps the broker a little more honest because they have lots of irons in the fire, directions they could go, whatever expression you want to use? Or does it create any sort of conflicts that you wouldn't have if you were going through a single company agent?
It can, and that's another one of the areas where it's good to be knowledgeable about what you're doing, because they may have a preferred company that they work with, and so they may, if they're, I'm not going to say dishonest, but if they operate a little bit more in a gray area, they can, provide preferential treatment to one insurance company versus the other. Like they could, show the one company another company's quote and try to get that to drive down the price. And they can do that in a positive way to your benefit as well, because you may have, an insurance company that doesn't have quite a good of coverage that's come in with a lower price, and they can use that as ammo to a better insurance company and say, hey, I've got this quote over here for this much. Can you sharpen your pencil a little bit to get us closer so it makes more sense to go with the better coverage. Does that make sense?
Yeah, that makes sense. Okay, interesting. So as you're talking about this, I'm reminded actually of banking and also lawyers. All right, so let me tell you what I mean. When you're out,
honest, upstanding citizens, and
we would never say
pillars of our community
anything bad about lawyers or bankers or yeah, that's right. No, what I mean is when you're looking for a business loan, for instance, the bank or credit union that you go to matters, but generally the advice I hear is what matters more is the banker, the person you're going to be working with. Are they responsive? Do they fight for you? Do they have your best interests at heart? So that's part one of this thought. The other part, where I bring in lawyers and whatnot, is understanding who is actually on your team. And the general rule of thumb is if you pay that person directly, they're on your team. And if you don't, you're working with them. You may have some kind of partnership, but they're not necessarily on your team. And so you have to watch for the alignment of incentives and all that sort of thing. So I guess take both of those points. Does the insurance agent matter more than the company? And are they on your team?
So I would say the insurance agent matters as much or more than the company, because when you're looking at your insurance agent, you want to make sure they're honest, they're responsive's a really big thing, and that they explain things well. And so that's really important, right? You want somebody you feel comfortable working with that provides that. And so that person can be, you can have a person that's just like that in an insurance agency, and you can have another agent that's the exact opposite in the same agency. And so the agent absolutely matters. But the agency matters as well, because you take, for example, you may have a old school mom and pop agency that doesn't do a whole lot in trucking. They aren't going to be able to provide the same level of service. You take, for example, one thing that's really important when it comes to insurance is you have to get certificates of insurance.
Oh, sure.
Anytime you haul a new load or you haul a load for a new broker, you're typically going to have to provide them a insurance certificate with their name on it. So it's a new, unique thing, so that they know that they're covered too if something were to happen. And, if you're, it's 10 o'clock at night and you're booking a load for some reason, or let's just say it's 6 o'clock in the morning, like I talk about, and the insurance agency is not open yet. If you're working with a small mom and pop agency, they might not have a way to provide you that insurance certificate right when you need it, and you'll end up losing the load. So, that's where, that's one of the areas where an insurance agency is important. Do they have the services that are critical to you? Like I would say, in my experience, you'd probably be better off going with a little worse agent in an agency that can provide you an online certificate portal versus a really good agent and an agency that can't, because that may have more of an impact on your business. So you just kind of need to take all those things into consideration when you decide who you want to work with.
Sure. Yeah. Okay. All right. So, and I didn't mean to imply that the agency doesn't matter, of course. But pay attention to who you're actually working with, right?
Yep.
So, but let's talk about the companies, the insurance companies that you could go with. Now, when we say insurance companies here, we're not talking about agencies that are brokering your services necessarily. It's the actual insurance provider. Is that right?
That's right. Yeah. So like if there's a claim, it's the company that pays the bill.
Right.
And, in the trucking world, you've got like Great West, you've got Century Insurance, Northland, Progressive, Canal. Those are some of the bigger players in the truck insurance world. And some of them have better coverages and are better at certain things than others. And, their pricing kind of varies, and there's lots of different things. So, that's one thing you just kind of need to keep your eye on is when you get coverage or when you're looking at quotes from these different companies, they're going to provide slightly different variations to insurance.
Okay. So what do you do as the business owner? Do you have this list of companies that you want to go through and you call each of them directly? Or do you find a broker or two that you want to have kind of compete for your business and have them call around?
So usually what I do, and this is kind of what I recommend, is you look for 2 to 3 insurance agents. And each one of those, some you take, for example, not every insurance agency they call them appointments, has an appointment with Great West.
Okay.
And not everybody has an appointment with Century. And so you just want to make sure you get enough insurance agents that you're covering those specific markets.
Right.
Right. Because you want to be able to get a quote from a Great West. You want to be able to get a quote from Century and Northland and Progressive. You want all of those and more. But typically, all it takes are 2 or 3 agents to be able to do that. Because like I said, most of them are going to have access to several markets. So you may have one that has access to Great West, Northland, and Progressive and Canal, and you may have another one that has access to Century and Northland as well. And
yeah. So is that one of your first questions then when you call up an agent? You say, hey, I'm looking for somebody who has appointments with Century and Canal. Do you have those? And if they say no, do you just say, okay, thanks for your time, I'm out? Do you ask them for a recommendation? What do you do?
I ask them, I ask them specifically, who do you have appointments with? Who can you give me a quote for? And then just make sure, that the 2 or 3 agencies or agents that you use can be able to provide those different quotes. And the thing is like, like I said, sometimes your agents are going to overlap. They may both be able to give you access to Northland. But Northland's not going to give you 2 quotes from 2 different agencies. They're typically going to give the quote to the person that submitted your packet first.
Okay.
And let's say you don't feel comfortable with that agent, you like the other one better. You want to avoid kind of doing this because it can burn bridges. But you can do what's called get a broker of record, which is basically a document that says that you submit to Northland that says, I don't want to go with this guy who the quote's through. I like this other agent better.
Okay.
So the point is you can do stuff like that. Make sure the agent that you're working with works for you and, kind of keep them honest.
Sure. Actually, that reminds me of something, going back to the idea of comparing this to bankers, working with bankers, because that's the world I kind of know. So that's the analogy I'm going to use. When you say find 2 or 3 insurance agents to have all this coverage, right, to cover all these companies, The other thing that I think of with banking is if you spread it out too much, if you're looking for a business loan, and you call 5 different bankers, well, those bankers all know each other, right? Especially the national ones, if they're working at Wells Fargo or Chase or whatever, they all know each other, and they all find out that, hey, this business owner, I'm familiar with this a lot with doctors and dentists, right? This dentist, he's playing 5 of us off of each other. And just in the mind of that banker, the calculation becomes, well, I'm probably not going to get that business. I have a 20% chance. Versus if you're talking to 2 of them, he's like, hey, I'm going to fight for this guy's business because I've got a good shot of getting it. Is that it at play here with insurance agents as well?
Yeah, you definitely don't want to spread across too many agents, because at some point you're going to get to the point where you've got so many agents that you've got two of them that access all the exact same markets. So you're not really doing yourself any favors.
Right.
You're kind of frustrating people. So that's another one of the reasons I really kind of just recommend 2 or 3, go with the ones that you feel most comfortable with. And another thing that I'll do is, like, I typically will tell the insurance agent, like, I know they've got access to these insurance companies. I want you to quote A, B, and C. And then you tell the other agent, I want you to quote D, E, and F, so that, they're not, they know who they're allowed to quote, and you're not overlapping, because you don't want both of them quoting C.
Okay. Yeah, that makes sense. All right, good. Well, I had another question, Chris, and my old man brain just let it fly away. But let's talk about, renewals. Oh, it was almost there. I almost had it, Chris, but let's talk about renewals. I do remember what it was. The question would be, once you find that agent who gets you the right quote, okay, now I'm set up with this guy. Is that your insurance agent now, for years and years? Are you building a long relationship with this person? Or when it comes up for yearly renewal, are you calling a whole new batch of agents?
I typically like to stick with the same person as much as you possibly can. With that being said, so in our experience, for the first 5 years that Haulin Assets was in business, we stayed with the same agent. We switched a couple different insurance companies. We did 3 different insurance companies during those 5 years.
Same
we
agent,
did
though.
Progressive, Northland, and Century.
Okay.
Those 3 years. Well, this year, and he provided us quotes with those, and I had one other agent that I would have quote 2 other markets. Well, this year, one of the other markets that's a really good, we've been with Century for 2 years. They're one of the top best insurance companies in trucking. Another one of the top best is Great West. Well, this other so our typical agent that we've been with forever doesn't have access to Great West, and that's one of the reasons we were quoting with another agent. And Great West came in with, the coverages between Century and Great West are very, very similar. They're both very, very good, but the Great West quote was significantly less, to the point where it made sense to switch. So we just, for the first time this year, made that switch.
So, okay. And so what I'm hearing is, hey, nothing against that agent. They don't have an appointment with Great West. We want to go with Great West. We got to find somebody new.
Yep.
Okay. All right. Yeah, that makes sense.
So the Great West agent has been quoting for 3 years, but this was the first year that Great West came in with a little bit better pricing. And we'll talk a little bit about that a little bit later on in the segment, because there's kind of a really important thing that kind of comes along with that.
So let me ask you one more dumb guy question about that situation. You want to go with Great West. How did you know you want to go with Great West? Did they reach out to you with a quote? And if that happens, do you still have to go through one of these third-party outside agents, or can you just go straight to Great West and say, who do you have on your floor that can help me out?
There are very few insurance companies that you can go and purchase commercial truck insurance directly from them. Okay. You typically have to work through an agent. In fact, off the top of my head, the only one that I can think of is Progressive Insurance.
Okay.
And even then, like, if you use an agent, you're going to get charged the same amount. Like, you're not getting any kind of price break if you go directly to Progressive versus going through an agency. So I still think it's better to work with an agent, because they can kind of be your advocate. They can help you with certain things. And so, yeah.
It's like they're your own personal Jerry Maguire.
They are.
Okay. There's a deep cut from the 90s for you, Chris. All right. So let's actually talk about renewals then. This is the 6th time that you guys are doing insurance for Haulin Assets. And so renewal time, what's the first step?
So good question.
What's your date? What's your renewal date? And then when do you take your first step?
So we renew the beginning of April. And what I recommend is about 60 days prior to renewal is kind of when you start the process. And the first thing that you really need to do is gather a whole bunch of information that you need to give to your insurance agent, the person that's quoting it. Some of the biggest things are, you need to give them, an equipment list with your values, like the value, how much your truck is worth, how much your trailers are worth, that kind of thing.
Not how much you value honesty and integrity.
No, monetary values.
Oh, okay.
So we're going to talk a little bit more about that later on in the episode, because that's also another really important thing that affects your costs. But you need to provide that equipment list, your drivers. You're going to have to fill out an application that provides kind of basic company information, how you operate, things like that. And in most situations, when you're talking to an agent that's going to give you a quote, they can just gather that information over the phone with you. They'll actually fill out the application, have 90% of it, if not 100% of it filled out. So all you have to do is review it and sign it. And then the last thing that you're going to have to get, if it's not your very first time getting insurance, is what's called the loss runs.
Okay.
And the loss runs you get from your past agents, and you usually need to provide 3 years. And what that just shows is if you've had any losses or if you haven't had any losses, and how much those losses were.
What do you mean? Okay, so
like if you've had a claim against you, like if you've gotten in a wreck or something's happened, and insurance companies had to pay out.
Okay, so it was, you were at fault for a loss.
Yep.
Okay, all right, got it. And then what about drivers? Did you say anything about drivers?
You have to
the
driver list your drivers, and typically you're gonna like their CDL number, the expiration date, just minor information like that.
Okay, so you're not sending the entire like driver record or whatever.
No, but, they'll typically pull that on their own.
Okay, yeah. All right, sounds good. All right, anything else on how to carry this out, these first steps?
So I talked a little bit about like you start gathering all that information about 60 days out, because it takes a while. Like you have to typically request your loss runs from your current agent and then your past agents, and all that stuff takes time. Filling out the application, just gathering the equipment list, it just all takes time. And then no later than 30 days prior to the expiration of your policy date, you want to have all that information submitted to the agents that are going to get you the quotes. That way it gives everybody a little bit of time to work up quotes and everything, because the next step is also incredibly important. I like to have the new policy bound. That means I've decided who I'm going with. I've made the down payment, signed all the paperwork at least 1 week before the policy expires.
Okay.
And the reasoning behind that is because, starting about a week before the policy expires, as you're booking loads with shippers and receivers, they always check, or shippers and brokers, they always check your insurance. And if they see your insurance is set to expire, they, most of them, a lot of them will not book a load with you until you can show your insurance policy's been renewed.
Interesting. Okay, so you want to have signed on the dotted line a week before expiration of your current policy. How far can you push that? Do you recommend even more time for some people if they have it, if they're able to do it?
I haven't had an issue as long as I've done it a week before. When I've had issues is when I'm within that 1 week period. But I don't know exactly how far out. I would say 2 weeks is gobs. But basically all you're doing is because when you book a load with the broker in that 1 week period, they're going to want to see the paperwork for your existing policy, and they're going to want to see the paperwork, like a certificate of insurance for the policy going forward.
And how reliably smooth is this process? Because I'm thinking of Haulin Assets, the 1 truck company, versus Haulin Assets, the 11 truck company, versus one day Haulin Assets, the 100 or 1,000 truck company, where if I'm running a fleet with 100 or 1,000 trucks and I'm thinking about insurance, and I'm thinking about 1 week, I'm sweating, coming up to that week mark. I got to get my name on that dotted line, right? So how much of a chance is there that one of these insurance deals would fall through? Does it ever happen to you? Do you ever see it happen where somebody then has to scramble in the last few days to keep their fleet or just their single truck moving?
That happens all the time. Like that, and that's another one of those reasons. Like ideally you'd like to be able to have your quotes back within 14 to 10 days of the policy expiring, so you've got a little bit of time to renew them or review them, decide which one you want to take. But typically once you decide which one you're going to take, as long as you can have a way to make the payment quickly, usually you'll have to send like a wire or Some places will take a check. Usually they, and some places will take a credit card for the down payment. So as long as you can make that payment quick and sign it, usually, that you can essentially bind the new policy the same day that you make that payment, sign the paperwork.
Okay.
That piece will typically go quick. You need to make sure, if you're not seeing anything within, 10 days of your expiration, you need to start putting some pressure on that agent.
Sure. Yeah. Well, speaking of putting pressure on an agent, one thing they presumably should be doing for you is helping with pricing, right? And helping you lower your costs whenever and however possible. Let's talk a little bit about pricing. How has it been for Haulin Assets as you've gone from 1 truck to 11 trucks? And not only that, but also just the age of the company, having a little bit of runway behind you. How has pricing looked for you guys?
So we've been pretty fortunate so far because our insurance rates, for the most part, over the last 5 years have decreased or held steady just about every year. And the reason that kind of has been that way is because we've just gained experience in business, right? So an insurance carrier is going to quote somebody that is a brand new trucking company different than they're going to quote somebody that's been around for 5+ years.
Right.
And so, after you've operated successfully for a year without any claims, they're typically going to give you the benefit of the doubt. They're going to assume you're a lower risk client, and you'll typically get a little bit less pricing. Once you hit somewhere between, the 3 to 5 year mark, the decrease you get because of experience becomes less and less. Like
the decrease you get becomes less?
Yeah, because you save a little bit after year 1 because you've been around, you've proven you're good. Year 2, that typically happens. Then year 3, you're going to get access to better markets that like those first few years, you typically only get markets that will take higher risk clients.
Right.
Because you're typically considered higher risk when you're brand new. So that decrease, your drop in insurance premium, what you pay, kind of goes down every year for the first 3 to 5 years, assuming you don't have any claims or your claims have been very minor. You'll typically get that decrease.
Okay, so it's we've got your years in business. We've got what risk factors, I guess. What would you include in your risk factors that will affect your pricing?
Basically anything that just shows that you're a safe operator. So, once you've been in business for a few years, that kind of checks one box. You show that you can operate a business, that you've been successful. Then your claims, I talked about those loss runs. If you've had any claims, if you're a 1 truck company and you've had a big claim, that's going to have a really big impact on what you pay. Because typically with loss runs, really with anything in life, kind of past performance is one of the best indicators of future performance.
Sure.
And so if you're showing that you've got either big claims or you've had a lot of little claims, they're going to price it saying, hey, you're a bigger risk. You've already proven in the past that we're going to have to pay out money. And so they're going to price it, or sometimes they just won't even give a quote.
And when you're talking about all these claims, are you still talking about at fault stuff? So, if something happens to you, then that's not necessarily going to ding that pricing for you. It's when you happen to something or someone.
Yeah, that statement's 95% accurate.
Okay.
If you've been involved in several accidents, even if they're not your fault, but you show kind of a pattern of accidents, maybe you're not the best defensive driver in the world or something like that, and you're getting in accidents that aren't your fault, or maybe they split it 50-50, you're still, you've got to be, you're going to be priced that way. It's going to affect your pricing because you've kind of shown this pattern that you get in accidents more than most people do.
Right. And in your case, okay, so you've got 11 drivers. Are they looking at the overall claims and losses from your company? I mean, I assume they are, but do they also break down by drivers? Are they looking at the individual drivers to affect your rate?
They do. So anytime you bring a new driver on board, your insurance company has to look at them. And they're either going to say, that person meets our criteria or that person doesn't. If they meet their criteria, there's typically no issues. But if they don't meet their criteria and you hire them anyway, you kind of expose yourself to a couple things. They can potentially just cancel your policy, or they may not renew your policy when your renewal comes up. And so we always recommend that you try your best to, kind of follow their guidelines. Like that's where, we've talked about, you typically need to have, your driver needs to have at least 2 years of driving experience. They, can't be an 18-year-old kid. They've got to have a little life experience too. Those are, and not too many tickets or egregious tickets. All those kind of things are things the insurance company is going to look at. And if you've, let's say you've hired 10 drivers, 9 of them are immaculate, looking really good, and then you've got one that's a little bit questionable, they'll usually give you a little bit of leeway with that one.
Right.
They just don't want to see
half
10
of your
bad drivers or 9 bad drivers and only one good one. Like it's or 9 that don't meet their criteria and one that does. So as long as you're mostly sticking to their guidelines, it's usually pretty good. But that's kind of one of the disadvantages of a one truck or a 2 truck person. If you've hired one good driver, you got 2 trucks, you've hired one driver that meets their criteria and one that doesn't, like you're 50-50 at that point, right? They're probably not going to look at that super well.
Right. Okay. All right. So it's all about that percentage. Let's talk then about the value of what you're insuring, because I know when I get something insured, that's a huge piece of it, right? So are there any strategies you want to use? Hey, you want to, it's like somebody getting a deduction off of their paycheck, right? You want to overestimate so you get that nice fat tax refund, right? Yeah. Are there any strategies that you consider, or is it just, hey, value it right down the line, give them the numbers? So
you have to be really strategic or really careful about how you value your equipment. I've seen people that say, hey, I'm just going to, this is $100,000 trailer. I only owe 50. I'm only going to insure it for 50,000. The problem is if that trailer gets in an accident and is a total loss, they're only going to pay you $50,000, and then you have to go spend $100,000 to replace it. So my recommendation is to always value your equipment right at what it would cost to replace it. And then on the other side of things, like if you say, well, I'm going to, this is a $100,000 trailer, I'm going to value it 120. All you're doing is paying for $20,000 of insurance that you don't need, because then they're only going to pay you what that trailer is worth at the time of the accident. They're not going to give you $120,000 even though you were paying for it. So you don't want to overpay, you don't want to underpay, or overvalue, undervalue. You want to value it right at really what the market value of that vehicle is at that given time. So anytime we do an insurance renewal, we go through our list of equipment with a fine-tooth comb. We'll go on to dealer websites. We'll go on to any market where they sell the type of equipment that we've got, and try to make the best educated estimate we can of what it's actually worth. And that's what we use for our values. Okay.
All right. So lastly, let's talk geography. I think this is probably going to factor in as well. I'm imagining, an insurance agent who really knows the roads across the country is going to go, oh, you're from Salt Lake? Oh yeah. How often do you drive Highway 6? That's a pretty risky route, right? Does geography play into this?
It does. Yeah. So, if you think about it, a trucking company that's based out of the Bronx, New York, is going to pay a different amount on their insurance versus a company that's in the middle of Nebraska.
Right.
So where you're located definitely plays a factor. Also, how many miles you drive a year and where those miles are driven. Like typically if you stay within a 300-mile radius of your home base, your insurance is going to be a lot cheaper. If you go all the way across the country, everywhere, your insurance is going to be a little bit higher. So you want to make sure that you understand that as well. And if you are just operating in a smaller radius, make sure your insurance agent knows that.
Yeah.
And then also don't try to pull the wool over their eyes, because if you
they'll figure it out.
They'll figure it out. And if you say, hey, I operate in a 300-mile radius, but you get a truck inspection, 1,000 miles away, or heaven forbid you get in an accident 1,000 miles away, they're going to look at you and like, hey, you said you only operated in this 300-mile radius, and that can cause you issues if there's a claim.
Right. Well, could they deny a claim outright on something
I don't know
like
the
that?
legality of that, and it's probably a little bit different in every state. But worst case scenario, I think they could come after you for it. They may still have to pay the claim, but they could sue you for misrepresentation.
Okay. So I imagine we wouldn't be able to come down in this episode and say, here is the rate you should expect, or the fee you should expect to pay, because it's going to be so wildly different for everybody, right?
It is, yeah.
But maybe we can talk about how much insurance you look for and how much insurance you recommend people go for, right?
So in most trucking companies, the federal government requires that you have a minimum of $750,000 auto liability policy.
Okay.
And so that's, if you get an accident, that's the most they'll pay out if you've got that $750,000 limit. That's what the government requires. If you're hauling fuel, if you're hauling hazmat, there's some other nuances that can require that limit to go higher. One thing that I always recommend is, even though the federal government only requires $750,000, most brokers, especially if you're finding any volume of loads from load boards or from brokerages, they're going to require that you've got at least $1 million.
Okay.
And so that's usually what I recommend, is you get $1 million policy.
And that's okay. So that's for the
auto liability.
Auto liability, and then we already kind of talked about insuring your equipment for its value, and not over or underestimating that value. So anything else on that? No,
the three main components of your insurance is that auto liability is a piece, then physical damage, that's if you get in a wreck, what covers your equipment. And then the third piece is cargo insurance. Insurance on the cargo that you haul. And you just want to make sure you've got the right cargo amount. Most brokerages are going to require a $100,000 policy. The other thing you want to keep in mind with that, though, is that can also vary a little bit. What policy you choose may depend on what you're hauling. You take, for example, some insurance companies, reefer breakdown is included as part of the policy. Others aren't. And if you're hauling reefer and you don't have reefer breakdown coverage, you could get in a situation where there's a big claim on cargo that was damaged, and your insurance company is not going to cover it. And obviously that'd be a big problem. So when you're comparing policies that you're looking at, when you've got quotes, those are the kind of questions you want to ask. Does this cover what I'm typically hauling? What are situations I don't want to get myself into? Because if I'm looking at two policies that are priced about the same, and I'm a reefer company, and one of them covers reefer breakdown and the other one doesn't, I'm going to take the one that has reefer breakdown, and I'll probably even pay a little bit more for that, because it gives me some peace of mind, and it protects me if there is some kind of issue.
Okay. All right. Perfect. Well, this has been a ton of information. I think good information on insurance renewals. I feel like I need a cigarette after all that, Chris. That was a ton. Any other final parting thoughts on insurance, or do you feel like we're good there and we've covered all those bases?
Just when you've got your quotes and you're trying to compare, make sure you're comparing apples to apples, and your insurance agents that you're working with to provide those quotes should be able to walk you through that. They're pretty familiar. Like if, I talked about an agent having, several different insurance companies that they work with. They may give you 3 quotes from 3 companies, and they should be able to walk you through the differences. It's not just going to be price. There's going to be other differences. And then they typically know their competition well enough too, that if you say, hey, I got a quote from, your insurance agent covers Century, and you got a quote from Great West, they should be able to, they should know their competition well enough that they can tell you what the policy differences are outside of just price.
Okay. All right. Very good. Okay, Chris, we'll wrap up our insurance talk there. Let's get to a listener question. Or this is more a listener rebuttal of you, Chris. Okay. Yeah. So this was on YouTube, and I just want to remind everybody before I get here that you can make your comments on Facebook, on YouTube, on the website, HaulinAssetsLLC.com. Make your comments, and we will do our best to address those. But this one comes from a user, Flat 4314. So I'll give you a guess as to what they haul behind their truck. But all right, so this comment, and this came after our episode on leased owner-operators versus independent owner-operators. And this listener says, there is one big benefit that you are missing of a leased-on owner-operator with the right company. I'm a leased-on owner-operator. My company has direct freight that pays 50% higher than anything on the load boards. At the company I'm leased to, all the direct freight pays over $3.60 per mile, and there's always freight available outbound when we use the load boards to get back hauls. So what do you think?
So, that $3.60 a mile, I have no idea what he's hauling. It's probably expensive freight. It may be heavy haul,
right?
Because he is doing flatbed stuff, and so it's hard to compare the amount. So I would take the amount. You may not be comparing apples to apples to your operation, but what he is saying is true. Like, that's one of the things where we talked a lot about in that episode of making sure if you are going to lease, that you lease to the right company. And some of them will promise
the moon
and not provide that. But he is right. Like, a lot of the times those good companies will be able to get rate at a higher price than you may be able to get on your own. Or maybe, sales is something that you aren't comfortable doing, you don't want to do, and they can kind of fill that gap for you. And so, yeah, that's absolutely true. But again, you kind of have to, some of them are going to do a really good job of that, and you will get better paying freight. Others will say they will, and they won't. And the other thing you need to keep in mind too is some of them will tell you that, and they may be able to get you those higher rates, but are they also going to be able to get the miles that you need to be able to, be profitable? And so, sometimes they can get you those higher rates, but especially because a lot of the times companies that lease owner operators, they also have their own trucks, and they'll put priority on their own trucks.
Right, of course.
And so, a lot of the times the poor owner operators only kind of get the scraps,
right.
and they may be good paying scraps, but they may be only operating at 50% capacity, right? They're only getting 50% of the miles that they could be running.
Right. Okay. So we don't necessarily need to rehash that entire episode. We can probably basically leave it there. Go back and listen. I think it was just 2 or 4 episodes ago.
Yeah, it wasn't very long ago.
Very recent. But ultimately, where you came down on this, Chris, was as a general rule, you recommend independent owner-operator status versus leased on, unless, with the big caveat being exactly what this listener is saying. If you can get a great situation, awesome. Congratulations. Thumbs up. Go enjoy your leased on life. And that's great.
Yeah, there's nothing wrong with being a leased owner operator, and you find the right circumstances. I would recommend you do a really good job of screening who you're going to work for. Talk to other owner operators that run under them. If you find a good one, great. Yeah, and it's a good stepping stone. If you eventually want to become independent, that can be a good way to kind of gain some experience before making that step.
Excellent. Well, thank you to Flat4314, I think was the name, for the comment. It's much appreciated. It gave us a chance to go back and address that a little bit. So if any of you have questions about what we talked about today, especially, but really, anytime in the last few episodes, if you have questions on that stuff, hit us up. Again, YouTube, Facebook, HaulinAssetsLLC.com. Make your questions and comments known, and we will address those in upcoming episodes. Chris, thanks so much for coming.
Thanks, Craig. We'll see you next time.
See ya.